Is 2025 going to be the year where the alpha can be found in Chinese stocks? Now, of course, we've been talking about the fact that Chinese stocks have been quite cheap for quite a while. And guess what? They continued to underperform despite the cheap valuation. But maybe 2025 can be the year where things turn around. It's quite strange that we say this right now because, well, you might think Trump coming in, that would probably be bad for Chinese stocks. But as I've shown you in the past videos, in 2016, what happened after Trump became president? Well, most, if not all, these Chinese stocks have gone up. So, yeah, maybe the same thing will happen. We've got some positive news coming out of China today as well. And one thing I want to show you, something that will probably surprise you right now, is the fact that if we look at China, FXI here, and compare it to S&P 500, Nasdaq 100, and the Dow Jones year-to-date performance, guess what? Guess what? China outperforms. China is up 31.78% compared to the Nasdaq 29.56%, S&P 26.49%, and the Dow 14.71%. Of course, a big boost came after the first time we've got this stimulus news, so a huge increase followed by a decrease. But even with that, I'm pretty sure I'm shocking you right now by showing you these results. But as you will see in just a bit, if you held Alibaba or Pinduoduo, for example, this year you've been underperforming. But then again, these types of stocks can stay cheap for a long period of time. Eventually something will happen. Will it happen in 2025? Well, my money is on it. My money is on Alibaba and Pinduoduo right now. I know some people might say, oh, how can you invest in Chinese stocks? To be honest, the moment I've made my gains, I'm going to sell it. I'm not going to marry these Chinese stocks. I just see an opportunity. Since US markets are at all-time highs, I think there is some opportunity looking elsewhere. I'm still way overweight US stocks, but it doesn't hurt to diversify a little bit. If it works out, great. If it doesn't, it's not really a big part of my portfolio. So even if it doesn't go according to plan, it's not like it will hurt the overall performance of the portfolio. Plus, the price we're at, the risk reward here definitely favors the reward. So let's talk a bit more about some Chinese stocks and the Chinese economy in this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. We'll start with the news here. So China mulls record 411 billion special bonds, according to Reuters. Money will fund consumer subsidies and investments. The finance ministry pledges greater, faster public spending. So China's policymaker planned to sell a record 3 trillion won or $411 billion of special treasury bonds in 2025. A move aimed at bolstering the slowing economy. The plan would be a sharp increase from this year's 1 trillion won and be used to support consumption and investments, as well as recapitalizing large state banks, according to Reuters, citing two unnamed sources. The fiscal move is set to increase China's budget deficit to 4% of GDP, reflecting a significant policy shift towards enhancing domestic demand and supporting key economic scenarios. Now, what's interesting is that, okay, it's true, Christmas Eve, slow day in the markets, but yeah, apparently Chinese stocks did not really care about that announcement. So what do you think? Do you think we're going to see a delayed move on the upside, or is this a nothing burger and nothing will actually move these stocks on the way up? Let me know down in the comment section below. Now, switching to some specific companies, in this case Alibaba, Pinduoduo, also going to show you KWEB, KWEB, where you basically get a mix of Chinese companies, and I'll talk about one specific company that has been flying under the radar. First up, Alibaba. We've got here a $134 price target by Goldman, which represents around 57% upside from the price we're at right now. They say the following: we are buy rated on Alibaba as we continue to see the company as a key beneficiary across various upcoming company-specific industry drivers, from 1. investment into core business, e-commerce and cloud to reignite growth, 2, potential domestic policies, any further consumption stimulus, which is exactly what we've got right now, ad tech upgrade, which is a key theme behind our lifting of preference for e-commerce into end of year. Taobao launched in last August its latest merchant tool revamp in recent years. 4, generative AI. 5, flows potential southbound connect. And 6, shareholder return, 3-year share repurchase program plus an annual dividend. And so if we do a quick checkup on Alibaba, year to date the stock is up 12.7%. At one point it was up over 50%. That's where a lot of people thought, okay, now we're back on track, but no, that did not really last that long. Now it has a market cap of $193.4 billion and a forward PE of 9.3 times, which is, yeah, it's insanely cheap, especially because this is a company that is still expected to grow, right? Growth is actually expected to accelerate in fiscal 26 and 27, EPS growing double digits. Low double digits, but still. Currently, the average analyst price target sits at $121, representing 41.4% upside from the price we're at right now. Then looking at forward PE, EV to EBITDA, price to sales, price to free cash flow, and price earnings to growth, of course, it is now lower than the 5-year mean, and price earnings to growth sits at 0.60. So yeah, quite cheap. Now, if you don't want exposure to specific stocks, you can buy something like this, an ETF. KWEB is the ETF here. The largest holding is Tencent. Then you've got Meituan, Alibaba, JD, and Pinduoduo. And it also gives you exposure to all the other companies on the screen. Now, with regards to Alibaba, we've seen the expected growth rates for revenue, but what about free cash flow? Well, free cash flow is actually expected to decrease 11.6% in fiscal 25 and then grow 10.7 and 14.4% in fiscal 26 and fiscal 2027. If we look at how the company generates their revenue, the majority comes from Taobao and Tmall Group, although that segment that comes specifically from China, we've seen some weakness there, more competition from the likes of Pinduoduo. But as you've seen along the years, revenue is more diversified. Yes, it's true that Taobao and Tmall are still the big chunk of the revenue, but now you're getting also Cloud Intelligence Group, International, China, which is the smart logistics network, and digital media and entertainment, still quite small here. But the other segments are growing rapidly. Now, it's also true that the other segments are not really as profitable as Taobao and Tmall Group. Yes, the cloud side of things is becoming more and more profitable, but Alibaba International still a money-losing business here. The logistics network is starting to become a bit better, but the impact right now is very, very minimal. What's interesting with regards to Alibaba stock right now is if we go all the way back here to 2016, the end of 2016, well, we're basically at the same price as back then where Trump 1.0 was incoming. And yes, your eyes are not deceiving you. The exact same thing happened. Right before we went up, right? It went from around, $80 all the way to $110, then dropped back all the way down to $85. And then, of course, after that, we've made our way up to around $210 1.5 years later. Will the same thing happen here? I don't know, remains to be seen, but the similarities here are quite something. Up next, we have a major competitor here, Pinduoduo, parent company of Temu. This company has a market cap of $138.5 billion and a forward PE of 8.8 times. Year to date, the stock is down 31.8%. Now here, this stock did perform quite well in the last 3 years. It was up 72.8%, but year to date, well, it has underperformed and by quite a lot. Now, this company is expected to grow way, way faster than Alibaba top and bottom lines. If we look at the average analyst price target, that sits 49% higher than the price we're at right now. And if we look at some pricing metrics, here, the same story, much cheaper than the 5-year mean with a price earnings to growth ratio of 0.42. We've seen the revenue expected growth rate for Pinduoduo, but what about free cash flow? Well, free cash flow for fiscal 2024 is expected to grow by about 50% or so, followed by 19.2% in fiscal 2025, and then another 26.2% in fiscal 2026. Now looking at the stock with Pinduoduo, we can see the following thing. We can see that the stock does respect the downtrend line and the uptrend line. It's been trading between those two lines for quite a while. It did try to go over it back here in May and mid-October, did try to go under it back here late August and the start of December. Currently, the 200-day moving average sits at $119.4, the 50-day one at $109.9, and the 20-day one at $103.3. And now the last company I want to touch on is a company that probably nobody really touches on, and that's Meituan. Now, Meituan you can buy on the Hong Kong exchange, not on the American one. This one has a market cap of 922.7 billion Hong Kong dollars and a forward PE of 16.9 times. Now, what's interesting here is despite this being a Chinese company, maybe it's because it's only trading on the Hong Kong exchange, we can see that year to date, this stock is up close to 90%. At one point after the first fiscal news that we've got, the stock was up close to 160% year to date. This is also a company that's expected to grow quite quickly and is already growing quite quickly right now. Oh yeah, and by the way, Meituan is basically a Chinese shopping platform. So yeah, another one. Now the average analyst price target sits 31.6% higher than the price we're at right now. And if we compare all three companies that we've seen, we basically get this. Meituan, the most expensive one of the bunch, right? If we look at forward PE, EV to EBITDA, price earnings to growth, price to sales, price to free cash flow, Meituan is the more expensive one. Then we've got Alibaba, if we only look at forward PE, price to free cash flow, and EV to EBITDA. And then we've got Pinduoduo, basically overall the cheapest one. Now, like I said, Meituan is a company that is already growing quite quickly and still expected to grow quite quickly in the future, especially if we look at free cash flow growth in fiscal 24. Growing by 33.3%, followed by another 33.9% and 15.3% in fiscal 25 and 2026. Comparing all three companies' gross profit and gross profit margin, we can see that, yeah, gross profit-wise, Alibaba still generating the most, then Pinduoduo, then Meituan. If we look at gross profit margin, here we can see that Pinduoduo is the number one at 62.1%. Then we've got Alibaba and Meituan around the same at 36.9% or so. But of course, you can clearly see here that Pinduoduo and Meituan have been growing much quicker than Alibaba since 2018. I'll quickly show you something with Meituan, and that's the fact that before we've got that stimulus news, the stock was trading at around $103, let's call it $100 back here Monday, August 5th at Black Monday. And then it actually more than doubled in a matter of, a month and a half or so. That's quite crazy. And then, of course, it did come down. It's now under the 50 and the 20-day moving average. So if you're looking maybe for an entry point here, if you can access the Hong Kong exchange, the 200-day moving average sits at 140. So yeah, quite interesting to see that despite it being a Chinese company, and maybe that's because it is trading only on the Hong Kong exchange, this company has actually outperformed quite a lot of other companies, right? By being up 90% year to date. Maybe Alibaba and Pinduoduo do not have to trade on the American exchanges. Maybe it will be better if they only trade on the Hong Kong one. Who knows? Anyways, I do think that 2025, you could get quite a lot of performance from Chinese names. That's just my opinion, and that's where I've put my money in. I can be completely wrong. But I do think that some deals will be made. Yes, despite the tariffs and the tensions, I think deals and agreements will be made. Once those things are on the side, the uncertainties will be removed and those stocks will go up. Of course, the business will still need to do well, but at current prices, they can continue to do well. It's just the multiple that will have to expand and we get some great returns. So that's all I've got for you right now. Of course, do share your thoughts down in the comment section below, like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.